Hey everyone, it's just Matt here. So today I'll be talking about a question. Which should I get? Term or whole life insurance? Well, this is like an eternal debate in the online community. And rather than taking part in this eternal debate about term versus whole life, which is better, we respect their decision. Some people are very strictly term. They believe in buying a term policy and then investing the premiums that they save compared to having a whole life plan. Some believe in having a whole life plan, especially for their younger kids, so they can have that comfort of a fully paid off lifetime coverage. My suggestion is it doesn't have to be either or. There's no one size fit all. I think when it comes to this kind of comparisons, don't just blindly follow some rule of thumb. Use some common sense. Think for yourself. What is it that actually suits your situation? Also, flow with your affordability level as well as your current life stage. Make sure that whatever things that you're getting, whether it's insurance or even any kind of decision making, make sure it suits your family situation. After all, we are doing this for them. The money is for your beneficiaries. Maybe what I'll do for this video is I'll share with you exactly what I do for myself so you can understand the psychology, the mindset behind when you need such a plan. Term versus whole life. So rather than blindly following some rule of thumb, I just use some common sense that flows with my family situation and my own affordability level at my own current income and my own life stage. No need to make it so complicated. Let's keep it simple. My first objective is I want to cover my outstanding home loan. That is my main objective. And I want my insurance to make sure that my loan is fully covered so my spouse doesn't have to worry about paying a huge amount of this loan if I were not around. I also want to fully pay for my kids' future university costs, where he doesn't have to take on a loan just to fund his own education. Lastly, I also prefer if there's sufficient money left over after paying off the loan, after paying off for uni costs, there's sufficient money left over to comfortably last my family for the next 10 to about 15 years. And also, I also like it if I were to fall sick, if I was diagnosed with an illness, a critical illness, it helps to replace my earning ability for at least 2 years of my income. So I don't have to worry about going back to work. I can fully focus on my recovery. Let's go over this slide where I share exactly what I do for myself, what kind of coverage I get for myself exactly. I started my insurance journey when I was about 26 years old. Today, I am about 35, and this was about 9 years ago. When I first bought all these policies, the advantage for me at the time was lower premiums because I started earlier. So the first thing I want to talk about is I actually got myself a term policy to cover for the duration of my home loan. So you can see over here, I actually have a $1 million term policy and it'll cover me all the way until I'm 55 years old. So I actually covered for close to about 30 years from the age of about 26. And I also factored in that by that time, my child would be of working age. By the time I'm 55, he'll be old enough to take care of himself. And premiums are very low for this term policy. At the same time, it gives me a very high coverage until I'm about 55 years old. 1 million coverage for any kind of death or permanent disability. On top of that, I also have another term policy which is called the MINDEF group term policy over here. You can see over here, it also covers me for about 1 million all the way until 65 years old this time. So about 10 years after my own personal term ends. And this is also to comfortably cover my family all the way until my retirement. At the same time, I also have this thing I also have a whole life plan in place for me. So after my term ends, my family still has some assets left over if I were to pass on later in life. And my whole life plan, as you can see here in the green color parts, it covers for all stages of critical illness, the blue part here. So even when I'm not working, it carries on to cover me for the rest of my life. Ask yourself, is the chance of falling sick higher when you're older or when you're younger? Yes, I understand I may not be earning an income by then, but my premiums are fully paid off and the coverage carries on for life. For my whole life policy, my premiums are fully paid by the time I'm 55 years old. So I have fully paid off all my premiums by then. And the coverage will carry on for the rest of my life. At least for me, it gives me that peace of mind knowing that Instead of having to draw upon my savings, my investments if I fall sick, I have a sum of money coming in from the whole life policy to help me to tide through my recovery period. Sure, if I'm retired, I understand there's no income to replace. But for me, having 200 to 400k additional money coming in, 200 to 400k additional money coming in, it'll be a great relief for my dependents, as I don't want to be burdening my family to look after me. They would have sufficient resources coming in to hire help, so they don't have to stress about being the main caregiver. Remember, if you have a medical plan reimbursing the bulk of your hospital bills, your monthly expenses are still going to continue if you fall sick, and is most likely going to increase. Either you use money from your own savings to pay for all your expenses, or you use money from an insurance payout. So in this case, I prefer money coming from an insurance payout in the form of a whole life plan to give me some money when I fall sick later on in life. Just supposing when I'm 65 years old, let's say I need more money for my retirement now. One of the options by having a whole life plan is I have the option to surrender my whole life plan. That means I forgo the coverage, I give up on the coverage, and I collect back the cash value for myself to enjoy. I've seen some clients do that in their late 60s, early 70s. They've held on to a whole life policy for more than 25, more than 30 years. When they get back the cash value, they actually use it to enjoy for their own retirement, where they receive back all the premiums they've put in over the years, all their full capital, plus a little bit of interest. So if I were to summarize, in my prime working years, from 26 all the way until 55, that's my prime working years, right? For most people, I have very high coverage. I have about 2.4 million in the event of any kind of death or permanent disability. And this is the period when my liabilities are the highest. So I want to have the maximum cover. In my retirement years, I still have some decent coverage left behind. In this case, 400k if I pass on, or another 200 for early stage illness, 400k for late stage illnesses. So I'm fully covered should I fall sick with a critical illness lump sum payout for my family members. At the same time, my own medical plan, my own hospitalization plan, it helps to reimburse any kind of expensive hospital bills. Overall, if I were to look at what I've planned for myself, in short, there is no one size fit all. Some people like term, some people like whole life, some have a mix of both like myself. It really depends on your situation. I would strongly suggest to talk to maybe a trusted advisor, someone who understands and places your interests first. Then from there, you can make an informed decision that suits your life stage based on where you are at this point in time. Thank you for watching this video. I truly appreciate it. If you have questions or you'd like to connect, you can scan the QR code to connect with me directly on WhatsApp, or you can also visit my webpage below, matthiasyeo.com. I'll put the link in the description below. Thanks again. I'll see you in the next one. Bye-bye.